Hi everyone, and thanks for joining us today for our Understanding Capital Grants for SMEs webinar. We know there's been some widespread issues with BT Internet today, so just to let you know, if you're having any connection issues and it drops off, just get in touch and we will send you a copy of this presentation. My name's Steph Davidson and I'm one of the senior managers in the corporate finance team at UNW. For those of you that aren't familiar with UNW, we're an independent firm of chartered accountants and we deliver a wide range of accounting and business advisory services to our clients. The reason that we're hosting this webinar is that we undertake the appraisal work on the grant schemes that are going to be talked about today. The UNW grants team is headed up by Carole Almond, who will be speaking today. Carole's got 26 years of experience across the public and private sector in appraising grants across a broad range of sectors. And our other speaker today is Simon Allen, who's the Investment Centre Director at UME. And Simon and his team provide fund management services, and in partnership with various public sector bodies, they're responsible for the management of the grants that we'll be talking about today. And just before we kick off the presentation, I've got a few housekeeping points to go through. If you've got any questions as we go through the webinar, please just pop these into the Q&A box as we'll be covering them off at the end. And if you've got any technical difficulties, if you just send a message in the chat box, one of my colleagues should be able to help you. And lastly, after the webinar, you'll be redirected to a survey. We'd be really grateful if you could complete this, as this will help us shape our event programmes to offer what you want to see. So I'll now hand you over to Carole to start off the presentation.
Good afternoon, everybody, and thanks for the introduction, Steph. I'll just start off by talking through what we're going to speak about this afternoon. And I'll start off by just running through the schemes which are available. I'd just like to stress at this point that all we will be talking about is the schemes which are available within the North East Local Enterprise Partnership area. Tees Valley does have its own separate grant scheme, but this has got different criteria. And so we will probably in the next 2 or 3 months be holding a separate webinar to cover the grants that are available within the Tees Valley area. Simon will then talk you through the individual schemes and the application process. And we are aware that for a lot of companies who haven't applied for grant support before, it can appear quite a daunting process. So Simon will also explain that support and help that is available throughout the process. I'll then run you through the common eligibility criteria which apply to all the schemes and the level of grant which might be available. We'll just give you a brief details of some separate support which is available for businesses in rural areas. And then Simon provides some actual case studies of people who have benefited from the grants already. When we set up this presentation, we had hoped to let you know that there was grants available to cover all of the North East Local Enterprise area and all the 7 authorities that are included therein. However, actually at the moment, there are only 2 schemes that are available. And both of these are funded by the European Regional Development Fund, or ERDF. There's a scheme in County Durham, which was set up about a year ago. That Simon will give you more details on, and also a separate scheme in the north of Tyne, which will cover Newcastle, North Tyneside, Northumberland local authority areas. For those of you in Gateshead, South Tyneside and Sunderland, there is an application going through the process at the minute. We are hoping to have a decision imminently on this one. Hopefully within the next 2 or 3 months, there should be a scheme up and running in this area. So please, if you are based in this area, don't switch off, because we expect the criteria to be the same as the other 2 schemes, and therefore you'll still be able to understand the help that will be available shortly. I'll now hand over to Simon, who will talk you through the schemes and the process.
Thanks, Carole, and good afternoon, everyone. The first of the 2 schemes that we want to talk you through in detail is the County Durham Growth Fund. As Carole said, that's been running for just over 12 months now. And in total, we have an £8.9 million fund to cover SMEs in the Durham County Council area. With both of the schemes, it's the local authority in which the investment is going to be based that matters. So whenever we're talking about the location of the project, what we mean is where the capital investment is going to be made and where the job creation as a result of the project is going to happen. So in the case of the County Durham Growth Fund, that's in County Durham. We've offered grants or have applications in progress to around 25 businesses so far, totaling just over £4 million, meaning that we've got just under 5 left in the pot. So plenty of money left and plenty of time to actually receive applications. The minimum capital spend that an SME would need to be spending to access a grant from this fund is £100,000, and the maximum grant we're able to give is £245,000. We've got just around 2.5 years left on the fund to complete projects, and just under 3 years for the jobs to be created as a result of those projects. So again, plenty of time for applications to come forward. And in the case of the County Durham Growth Fund, the maximum percentage grant that can be offered against that capital expenditure is between 20 and 45%. Carole's going to give you a really thorough explanation of what's behind those percentages shortly. The second scheme is the North East Growth Fund, and in this case the coverage is the local authority areas of Newcastle, Northumberland and North Tyneside. So again, that's where the project investment needs to be and where the job creation also needs to be. In this case, we've got a slightly higher minimum capital expenditure of £134,000, and the maximum grant in this case is £200,000. We've got £3.5 million in the pot, and most of that is still available because we've only just got going. Capital expenditure needs to be complete by the 31st of October 2022. So again, like County Durham, we've got about 2.5 years to achieve that. And again, we've got a little bit longer for jobs to be created. They must be created by the 31st of March 2023. The grant percentage is somewhat different in this case and a bit lower than with the County Durham Growth Fund. So the maximum grant we're able to offer through the North East scheme is between 10 and 30% of the capital expenditure. Just want to spin you through the application process and how UME will support SMEs through that process. We're fortunate in having a number of dedicated business advisors who can handhold applicants through the entire process, and that journey starts with an inquiry to our team in Seaham. Please give us a ring and we'll tell you straight away if you're eligible to have an appointment with a project advisor. And if you are, an advisor will either come and see you or to talk to you over Teams or whatever, and carry out a diagnostic with you and create an action plan that will help you to understand if you have an eligible project, but will also signpost you to information or business support that's available for you in any event. Among the other things that UME does is to deliver the National Business Support Helpline, and we have a knowledge bank of all the business support that's available everywhere in England. So even if we can't help you through this particular grant scheme, we can doubtless signpost you to other support. Where you do have a potential grant application to one of the schemes, the advisor will then go on to be able to help you with the application itself and to prepare that for presentation to our investment panel. Each of the schemes has its own investment panel made up of business people from the localities, and it's their job to decide if an application can proceed to the final stage of the process, which is the substantive part where UNW come in. They'll carry out due diligence on the company applying and also on the project itself, and prepare a report for us to then proceed to offer a grant to the business applying. Once in receipt of your offer and having accepted it, you would then deliver the project. The grants are payable in arrears, but we can break down the project into chunks and pay you in installments according to the expenditure that you've incurred at that point in time and the job outputs that have been achieved. Typically, projects of this size, which obviously tend to be quite large, tend to go over a year or possibly more. So during that period of time, you could submit 3 or 4 grant applications, claims, I should say, and be paid in installments to help with your cash flow. So just to recap on the support that we're able to offer, we'll always meet with applicants and potential applicants on either a face-to-face or a virtual basis. We will talk you through the process and review drafts of grant applications before they're submitted, so that when you actually put your application in, it's in the best state it can be in, and has therefore the best chance of success. And we'll handhold you through the entire process, all the way through to actually claiming and being paid your grant.
Thanks, Simon. I'll just go on now to cover the criteria which apply to all of these schemes. I have got more detailed slides to cover to these bullet points, but just to run through them now. As mentioned earlier, these schemes are only available to small and medium-sized enterprises who are operating in an eligible sector. The schemes are very much aimed at promoting capital spend and new jobs within the region, and all the applications must be compliant with the EU state aid rules. We are looking to support projects and companies which are viable and sustainable in the longer term, and the company must also be able to demonstrate that there is a need for the grant support. The first question on there is to establish what is an SME, what constitutes an SME. The first step in that is we need to look at what entity are we looking at when we talk about the applicant. So if it's a standalone company with no related companies, not part of a bigger group, we only need to look at the data of the particular company. If the company is part of a legal group, the data to establish the SME is all based on the consolidated figures for the whole group. If there are related companies, for example, if some of the shareholders have also shareholders in other businesses, so there's common ownership between the two companies, then we may also need to take into account the figures for the other companies as well. The key figures to note is that the business must have less than 250 employees and either have a turnover of less than 50 million euros or total assets of less than 43 million euros. Please note when we talk about total assets, it's not the net assets figures that's shown on the balance sheet, it's actually your total fixed assets plus your total current assets. Now what's very important to note actually is this information is based on the last set of approved accounts. So for instance, if a company currently has 300 employees, but the 2019 file accounts show on average only 200 during that year, then it's a 2019 figure that applies, so you would still be an SME as long as the turnover was, or the total assets were less than the limits as well in that, the 2019 figures. And also, you must be within the limits of 2 consecutive years to qualify. So for instance, a company where even the 2019 figures show that you were over the 250 and over the 50 million, as long as the 2017 and 28 accounts showed you below them, then you would still qualify as an SME. So please don't rule yourself out if you are at around about the limit of the 250. It may be that you will still be eligible to apply. Determining the SME status can be quite difficult when there's a lot of related companies or group companies, etc. But as Simon mentioned earlier, his advisors are available to help you understand that, and they will advise, look at the position, and they will advise you whether you would be eligible to count as an SME or not. There are a number of sectors that aren't eligible support under the rules. The key thing to note really when we're talking about sectors is the activity must provide more than just local service. For instance, although we want to support the capital investment and the new jobs in the region, we are looking about net new jobs. So for instance, if you've got a company that maybe supplies local plumbing or electrical services, and there's a lot of competition in that sector within the region, then by helping one company to create a job, all we're doing is mean that other companies might lose jobs. So it's very much about creating net new jobs within the North East region. As I say, there's a few sectors there we know which aren't eligible support. Some of those are because of the state aid rules that apply across all schemes. Some of them are particular to the ERDF scheme. As I mentioned earlier, these schemes are available to support capital expenditure. Some of you who've dealt with previous grant schemes may be aware that we can sometimes support the wage costs rather than just capital costs. However, that's not the case because these are ERDF funded schemes. We can only look at capital expenditure. So this could include land and buildings, if companies buy new land, extending their existing building. It can also include the lease cost for new premises, as long as it's new or additional premises to the business, and as long as the lease will run for at least 5 years. The expenditure can also include the fit out costs for premises, plant and machinery, and any other capital equipment. For example, if there's furniture, fixtures, fittings, IT equipment, they could also be eligible for support. Again, because it's the ERDF, the capital spend must be procured in accordance with the EU regulations. Now, depending on the size of the capital spend and the type of capital spend, this can vary from either needing to obtain 3 quotes for the equipment or to going through a full tender process. One point also to be aware of when we talk about capital spend is that we do expect capital spend to be maintained in the business, and the length of this can vary from 5 years from plant and machinery up to 15 years where the land and buildings is owned by the company. And as I mentioned earlier, this is very much about creating net new jobs for the region. They need to be permanent jobs. We expect them to last for 5 years, and the new jobs that we can count is a net increase from the number of jobs in the company at the start of the project. As a rough guideline, the grant is expected to average around about £10,000 per new job. That's very much an average. If we have projects where there's very highly skilled, well-paid, qualified jobs, you may get a higher than £10,000 average. But conversely, we've also helped in other companies where the average has been a lot lower than £10,000. On top of the ERDF application regulations, all applications must also be compliant with the overall EU state aid rules. These govern the level of public sector support that can be given to private sector businesses. The state aid rules do impose some sector restrictions, as I mentioned earlier. If I'd given this presentation 2 or 3 weeks ago, we would have been saying that actually, if the company who's applying, or the group of which it is part, meets a definition of an undertaking of difficulty, then support can't be offered. Now, to meet this definition, there's a very black and white criteria set out within the state aid regulations, which says if the group or the company has been operating for more than 3 years and it has accumulated losses which exceed more than 50% of the share capital and share premium, then it's classified as an undertaking of difficulty and can't access support. However, these regulations have been recently relaxed as a result of the COVID crisis and what's happened there. So now there may be scope to help companies who do actually meet that criteria. So again, if any applicants are worried that they might fall foul of this criteria, please speak to one of Simon's team and they'll talk you through it and work out if actually there may be a route to support. There is also the state aid rules which limit the amount of grants as a percentage of the capital spend. As Simon mentioned before, these vary between the area, the location of the project, and also the size of the company, and can be anywhere between 10 and 45%. Again, this is something that the advisors will be able to help you with. We are looking to support projects and companies which are viable and sustainable in the longer term. As Simon mentioned earlier, the grant is paid in arrears, normally on a quarterly basis. Therefore, there must always be funds in place to be able to fund the capital spend up front. It's also important to note that grant is not just a replacement for external funding. We do still expect companies to go out there and where they can access maybe invoice discounting or asset finance or loans or mortgages to cover the project. In order to assess the viability when we come to do our due diligence, we obviously need quite a lot of financial information. And as part of the application, we will ask that you provide the most recent approved accounts and also up-to-date management accounts for both the company and, if applicable, the group of which it is part. We also ask for forecast profit and loss account for at least 2 years going forwards. And we ask for this both with and without the project so that we can get an idea of the effect that the grant will have on the business. We also expect all applications to be accompanied by a monthly cash flow forecast, ideally covering a 2 or 3 year period, but at least for the first 12 months of the project, so we can see the funding is in place for the project and it is going to be viable and deliverable. We appreciate that small businesses aren't always used to preparing cash flow forecasts, but again, there is support available to Simon's team, and also you'll probably be able to use your own external account to help you with cash flow forecasts if needed. And we will also ask for information on the key customers of the business and the markets in which you operate, both historically and going forwards, so we can see where the growth is likely to come from as a result of the project. The need for grant support is always, in some ways, the most difficult part of the process. It can be very subjective. Obviously, although we want all these investments, the capital spend and the jobs to happen in the North East, this is taxpayers' money that we're talking about, so we need to ensure that the grant is going to make a difference to those projects, because if they're going to happen anyway, why should we be giving them grant support? So the first step is to demonstrate that the project would not go ahead either on the same scale or in the same location without some grant support. The second part of the process, and it's a bit that we sort of probably press most deeply when we're doing our due diligence, is to establish that the level of grant requested is indeed the minimum necessary for the project to proceed. Obviously, companies who are applying are very keen to get the maximum they can, but as I said, it's taxpayers' money, so we need to make sure we're getting good value for money. To give you an example of the arguments that can be used to demonstrate why grant support is needed, we often provide grant to share the risks of a project. So we will usually see baseline forecasts which show that, yes, you might be getting a certain level of external funding. And if everything goes according to plan, your new customers come on board, plant machinery all works first time, then yes, looking at your forecasts, everything's fine, you can afford to do the project, you could do it. However, what's holding management back from investing is the risks associated with the project, because we all know that nothing ever goes according to plan. And so what we look for is to come in to quantify those risks. For example, if the new customers don't come on board quite so quickly, or you lose some of the new customers you expect, or maybe your raw materials prices go up. We look for those risks to be quantified within a set of sensitised forecasts. And then the grant can be used to share the risks shown in those forecasts, i.e. the difference between either the profit or the cash if the risk should happen. A similar argument that can be used is the need to maintain headroom within the business. Again, the forecast might show that the company can afford to do the business, the funding is there, but the risk might mean that actually it pushes you down within your headroom certain months. For example, as has been demonstrated quite amply by the COVID crisis, companies do need to maintain a certain level of cash within the business. It may be that you've always maintained 2 months salaries and overheads costs just to make sure that you can always continue to pay your staff even if everything drops off a cliff. So we accept that might be a reason why companies need the grant, just to push them back up to that headroom that otherwise wouldn't have if they invest in the project. Another argument which can be used is international and national mobility. If there is an alternative site to do the project, either in this country or abroad, which is cheaper than doing the project in the North East, then grant can be available to help offset some of those financial differences. I appreciate this can be a difficult argument for companies to get their heads around and to put into words, but again, the advisors are there to help you if needed. And I guess the most important factor for companies is how do I decide what level of grant is available? This is influenced by 3 of the factors that were mentioned previously. First of all, there are overall limits on the grant as a percentage of capital spend, which, as I mentioned, can be anywhere between 10 and 45%, depending on the location and the size of the company. This also has to be tempered against the number of jobs which are actually going to be created. As I mentioned, the average is 10,000 grand per job. That's very much a guideline, but gives an idea of what we consider to be value for money in terms of the grant. And the third element to take into consideration is the quantification of why this grant is a minimum necessary. The examples I gave before are reasons the risk to sharing or maintaining the headroom will come up with a level of grant which is minimum required. And generally speaking, the grant available will be the lower of the above three figures. I just want to take a couple of minutes just to talk about some additional support which is available for businesses in rural areas within the Northumberland, Newcastle and North Tyneside areas. This is a separate scheme, it's not actually operated by ourselves in UME. It has got slightly different criteria, but I just wanted to make you aware that it does exist. And it has slightly more relaxed criteria and may apply to some smaller projects that are out there. This grant scheme does still expect job creation, but their average grant per job is £25,000. It is, however, aimed very much at the target sectors that they want to try and improve within the region, and it's only for business-to-business activities, not for business-to-consumer. It does have a smaller grant size. As I said, the minimum grant there is 20,000, so maybe that some of the smaller projects, which wouldn't be eligible for the schemes already mentioned, might be able to apply for the rural businesses. If there are any projects out there which you think might be eligible, please, there's an email address there, just please contact the Rural Support Advance. They'll be able to give you further advice on these projects. And I'll hand you back over to Simon, who will talk about some of the case studies of people.
Thank you, Carol. So obviously there was lots of theoretical information there on eligibility and the sorts of projects that can be supported. So we thought it was essential to bring it to life for you and give you a handful of examples of projects that have actually been successful with grant applications and are currently being supported with grants. So the first of those is a small print supplier based in Consett in County Durham. And what they needed to do to unlock growth in their business was to make an investment in new printing machinery. They do large format printing for large signage and banners for all sorts of retail and other companies. And what this new machinery enables them to do is to print on lots of alternative materials in a large format, and that's helping to unlock new customers for them. And as a result of that, they'll be creating 4 new jobs in Consett. The second example is also from the County Durham Growth Fund. It's Alexander Technologies, an industrial battery manufacturer based in Peterlee. And in this case, they are leasing and refurbishing a new building in which they're creating an electrostatic discharge production area and new labs. And again, this is taking them into new customers and a new segment of their marketplace as well. And as a result of that, they'll be creating 55 new jobs. And the third example is our first one from the North of Tyne growth scheme. It's a company called Datatron in North Shields, who provide document image archiving services. In that case, they simply needed to expand. So the project is to help them to take on additional premises with associated fit out of those premises. And in that case, they're set to create 8.5 new jobs by the end of the project. That's just a small sample, obviously, of the sort of capital expenditure that's eligible and the sorts of projects that can get support. Every case will be different, so the key is really to come and talk to us. These are the contact details for Carole and I. Both of us are happy to answer any questions from anyone at any time. Well, almost any time, I think, Carole. And also on this slide are the 2 dedicated email addresses and the phone number for the UMI helpline through which you can inquire about either of the 2 schemes that we've talked you through.
Thanks, Simon. So I've got some questions that I will put to both of you. So if we just run through those. The first question, are there limits on an SME receiving grants in any financial year?
I'll pick that one up, thanks, Steph. There's no easy answer to that one, really. It does depend on what route we use to support the project. As long as the project, there are, for example, 2 projects with different sets of eligible costs, then generally speaking, there's nothing to stop a company having 2 grants in the same year. The only restriction was if we offered the grant under the de minimis regulations, and I don't want to complicate things by going into too much detail at this point. But there's, in principle, there's nothing to stop companies having more than 1 level of grant support. Again, this is something the advisors can help with.
Yeah.
Okay. And then someone's asked, can the grants support startup businesses?
Yes, there's nothing to stop startup businesses applying. Indeed, the schemes actually have a target of helping a certain number of startup businesses. The only restriction might be that obviously there's a minimum level of capital spend for both schemes. 100,000 in the Durham scheme, 134 North Tyneside, and obviously some startups may struggle to spend that level of capital spend. But certainly, as a matter of general principle, yes, startups can apply.
Okay, fantastic. So the next question, someone said that their business has capital investment plans, but in the current situation, it's more about safeguarding their existing workforce rather than creating new jobs. Is this something that you can help with?
I'll pick that one up. We've had quite a number of discussions with the European Regional Development Fund Managing Authority, in other words, the people who provide the funding behind these schemes. Obviously, when the schemes were designed and the funding applied for, coronavirus was not heard of. But since it's arrived, a different view is being taken about job creation, and we absolutely recognise that it may not be possible for companies to create new jobs, and safeguarding of jobs is all that can be hoped for in the circumstances. So we'd like any potential projects out there that have eligible capital expenditure to come and talk to us about what the impact of their project, if it went ahead, would be on their business, because we may be able to support irrespective of the lack of new jobs.
Okay. And then I move on to the next one. Okay, there may be institutions, organisations holding unspent ERDF or grant funds in the North East. Would it be possible for the organisation to contact them?
I'll pick that one up. So we can only really speak with authority about the 2 schemes that we are managing. But as a general principle, the ERDF Managing Authority keeps quite a tight rein on the projects that it gives funding to. And if there are unspent allocations of ERDF that have been allocated to institutions, they would normally claw that funding back and hold a new round of applications. The definitive answer should really be given by the ERDF Managing Authority, which is the Ministry of Housing, Communities and Local Government. But that's the answer I think they would give.
Okay, fab. So we've got another one come in. If someone has taken CBILS or bounce back loan support through the government schemes, do these need to be taken into account with regards to state aid?
No, they don't, as far as the grant schemes that we've talked through this afternoon are concerned. Those loans are still state aid, but they come through a different state aid route from our two grant schemes. So you can have both.
Excellent. I'm sure that will make everyone very happy. Okay, now the final question. Do businesses have to be revenue generating to be eligible?
Yes, they do. Yes, they do. So I'm interpreting that as the difference between a startup business, which we previously said is eligible, and a pre-start, pre-revenue. Pre-revenue wouldn't satisfy the eligibility criteria for EIDF, I'm afraid.
Okay, perfect. That's great. Thank you. Well, that's all our questions finished. So just a reminder that our next webinar is on accounting standards, and that's on the 29th of July. So if you'd like to register for that, there's a link being put into the chat box now. And our previous webinars on VAT, employment taxes and cash planning can all be watched on the news page on our website, and there'll also be a link in the chat box to that. So just want to say thanks to Carole and Simon for a really informative presentation, and thanks everyone that's dialed in today.